YouTube, welcome back to the channel. Thank you for joining us today. We have a very special video teed up for you guys where we're going to be talking about mortgage rates, what happened with the Fed yesterday, where rates are going to go into 2024, into the year end, and possibly into 2025, because there's a lot of people that are waiting to hop into the purchase market right now, waiting on those rates, and there's a lot of individuals that bought with high sevens, even high sixes that are looking to refinance and save money on their monthly payments. And we're going to talk about when you will have that opportunity in today's video. So, as everyone knows, yesterday we got a 50 basis point cut from the federal funds rate, which is great. We've been waiting for it, but mortgage rates actually moved higher after the Fed cut. And I want to talk about that because it's important to note that the mortgage rates and the federal funds rate are not directly correlated. So when the Fed cuts 50 basis points, does not mean that the mortgage-backed securities also reprice by 50 basis points. They're not directly correlated. Actually, the bond market, mortgage-backed securities that influence mortgage rates can move at any time. And because we have been anticipating the Fed cut that happened yesterday, they've already been repricing for the better. That's why we're at an 18-month low before yesterday's meeting, right? So that's a big thing. And yesterday we actually had an increase in mortgage rates. We saw the 30-year fix go up by 4 basis points. We saw the FHA go up by 5, and the VA go up by 6 basis points. Now, that is according to Mortgage News Daily, which takes in an index from a bunch of different lenders, and this is kind of the average rate. And also, if you're not here, I would suggest reading their rate index methodology, because they actually run a top tier scenario pricing with 780 FICO and 75% loan to value. And not everybody has those qualifications. So if your rate's a little bit higher than that, it's probably due to them taking top tier scenarios and you having some kind of risk adjustment built into your pricing. But that's not the topic of today's video. We're going to talk about where the Fed is going to go and where mortgage rates are going to go into the year end. So currently, the federal funds rate is right there in the middle of your screen, 475 to 500 basis points. And with that, we are seeing rates on the conventional side, on the 30-year, low 6, and high 5s for conventional or for government. Now, this is CME Group's federal funds rate watch tool. And this is a forecast of where the Fed is going to go at every single meeting that they have coming up. And we only have 2 more remaining in 2024. And now they are currently expecting a 61% chance of another 25 basis point cut on November 7th. And they're expecting us to be 400 to 425 by the Fed meeting in December. Now, if we get to 400 to 425 in 2 months from now, or 3 months from now, we're going to be 0.75% lower than where we currently are. So if you get basis point for basis point adjustment from the federal funds rate to mortgage rates, that means that our 30-year fix is going to drop by 0.75%, and we're going to be just below 5.5 on the 30-year fix, and we're going to see the government loans right there at 5% flat, okay? Now that's by the end of 2024. Now the truth is, it's a little too early to start forecasting rates into 2025 because there's a lot of things that go into what the Fed is going to do and what the bond market is going to do. We don't know where inflation is going to go. If inflation goes back up, they're probably going to stay higher and hopefully not raise rates at some point. If unemployment starts to go up, and we have been seeing unemployment go up over the last few months, if unemployment spirals out of control and maybe that goes to 5%, 5.5%, or 6%, we might actually see higher rate cuts than what we were expecting. And we could see these percentages on the lower end move up and be at a much lower rate sooner than later. But, we don't really know what's going to happen. That's why there's a lot less certainty moving forward into 2025's meetings. 19th of March, for example, there's about a 33% chance it will be 150 basis points lower than where we currently are, or a 37% chance will be 125 basis points. So we still know that rates are going down. we know that we're expecting at least mid fives, possibly low fives by the end of the year, and then we might actually be in the high fours by sometime of 2025. Now that's the forecast. Of course, as time goes on and we get the economic data that changes these predictions, we will update you guys accordingly. Now, if you got value out of this video, if you guys need expert mortgage advice and guidance, I'm going to leave my contact information in the video description below. I will also leave the link to this website here in the video description below so you guys can stay up to date. I'll also drop the Mortgage News Daily link in the video description so you guys can check on that and just stay up to speed with the markets. And if you guys need anything, you'll have my contact information in the video description. If you got value out of this video, please like, subscribe. Thanks for sticking with us through the end, and we will see you guys in the next video.